Hey guys, this is a market update. We have to look at what's going on behind the scenes with Bitcoin and crypto right now. If you hold Bitcoin or ETH, check this video. This data is for you. This is extremely important data showing the fundamental adoption of both Bitcoin and ETH. Why that's important is because Bitcoin specifically, which we'll look at first, is just following its adoption curve, just like it has done in every other previous cycle. And so that is important because we are now in the absolute worst possible environment for Bitcoin. The worst environment for Bitcoin, we suspect, is high rates and negative money supply. The money supply has actually gone negative, or at least M2 has gone negative in the US recently. This is the worst environment for BTC, but the thing is just performing like it has in every previous cycle. And so let's have a look at why that's happening and what's going to be happening to the macro over the next 6-12 months. In terms of Bitcoin and its price right now, we're not oversold and we're not overbought, in my opinion. We're just kind of right in the middle of the range, right where I would expect Bitcoin to be around this price during this part of the cycle. These two dots right here up at 32K is the average price of short-term holders, or at least people that have been in for around one cycle. You can see that just comes in around the resistance price around 32K here as well. So this line, 32K for me is not going to be broken until something fundamentally changes. Either Fed or other central bank rhetoric changes, which is not coming yet, or an ETF application being accepted, or the Grayscale SEC lawsuit going in Grayscale's favor. One of those things can push us up, but 32K is still going to be a big resistance until potentially Fed policy changes. To the downside, 20K for me, this is long-term holders average price. Again, a big support level. So we're right smack bang in the middle of this. And if you look at the longer term chart, Bitcoin is exactly where it should be. So I don't think we're expensive. I don't think we're really cheap. And 5,000 either side can happen within a week, depending on news flow. So for me, as an investor, 26K, happy to keep accumulating. We're towards the bottom end of the cycle, not overbought, not oversold. As a trade, you're really looking at one short-term catalyst to move the price in either direction. Is it the Fed coming out harsh again, or is it maybe Grayscale winning the case? So if you are a trader, that's really the trades here in terms of the next 5,000 move. If you're an investor, all of this is just still within the range. It's not overbought, it's not very cheap, but longer term, this is towards the bottom of its range. And we'll look at that in this video. If you're a trader, check out the deposit bonus on Bybit up to 30K. Leave the link in the description. You sign up, trade, and you get that deposit bonus up to 30,000. This is the worst possible environment that Bitcoin has ever existed in for its price. However, it just carries on as normal as every previous cycle has seen. This is Bitcoin's adoption curve. So what we have here is the non-zero address count. So that is the amount of participants in the network. And then a smooth line of that, the power curve of that up here. You can see that Bitcoin price with high volatility revolves around this, and we're just carrying on as every other previous cycle. The low at 15,000 up here, and we've just climbed and ground higher from that. Why that's important is because money supply growth has been negative the last few years. This is data going back to the 60s, negative M2 growth in the US. Now, worldwide M2 might be a little bit different, but the US is still really the most important single factor here. Huge growth driving to an all-time high, and negative M2 growth here, the worst possible environment. Bitcoin is going to go up in price the most when liquidity is being pumped in and interest rates are low. Don't let that distract you from what's actually happening though. When the currency is debased, when they pump liquidity, they print money and they pump it into the interbank market, they're debasing the currency. All assets are going to rise in that environment because you're debasing the denominator. That is not actual growth. You are not gaining money and wealth when they debase the denominator. You're just getting a rise in the price of the asset because it takes more of the fiat currency to buy the same amount of units of the actual asset. What is important is the actual adoption of the technology, which drives real value accretion. This is what we need to look at, the adoption curve right here. We are down at the very bottom of the range and just grinding higher through pure adoption, people coming in and actually buying and holding Bitcoin. And so we are towards the bottom of this in terms of price, which is great, because the next phase of the market, if the economy slows down, you're going to get easier financial conditions. Easier financial conditions is better for Bitcoin's price. But that's somewhat irrelevant because the real adoption of it is the thing we want to be invested in. This thing is following every previous cycle. And right here at this price, we are just grinding higher with the expectation of this network continuing to grow, more demand than supply. And then over the next 6, 12, 18 months, it's very hard to see a scenario where central banks become even more hawkish than they are now. We're looking at data come out around the world that is quite weak. Now, whether it's a huge flush, whether there's some sort of crisis somewhere, that's unpredictable. But we know the general trend is that fiat currencies eventually will come to save the day if growth is slow and underneath the target of what central bankers want. The adoption curve of Bitcoin is the most important. Every other cycle previously. So see how this grows. And if Bitcoin adoption curve continues to go, you can see it just grinding higher from here. So those peaks, you see the peaks, that is when currencies are being debased the most. That's not real growth. That's just the price moving up in relation to how many dollars it takes to buy the same amount of units of BTC. The real growth is happening here, and we have not diverged from that. Very, very strong data here to show Bitcoin will continue to grind higher as it grows as a network. That data is also borne out right here as well. This is Jamie Coots from Bloomberg. I'll try and link these threads in the description as well. What he's looking at is the what he calls entity adoption, what I would call active addresses. During the latest crypto course update with my research, I was looking at active addresses and the cycles with my investment strategy for the next, Bitcoin halving in the next cycle. I was looking at active addresses. Entities are similar. What he's seeing here is higher highs, right? So each bear market, you see a reduction in active entities or active addresses. During the peak of a bull market, you see these big peaks. So we can see a low, a higher low, and a higher low. So again, you're seeing real fundamental adoption between cycles in Bitcoin active addresses. There's more people in the network. The whole point of Bitcoin, it's a savings technology. More people are using Bitcoin to save, putting value into the network over time. So you can see that here. Now what he does is a Z-score as well to actually see where is the Bitcoin price versus the adoption with the active entities or the active addresses. So what he says here is for the first time since Q1 23, Bitcoin is undervalued on this metric, but not yet extremely oversold or cheap. However, recent action has de-risked the asset from this perspective. So what you can see, again, he's taking active entities and trying to put that on the price chart. And for right now, like I said, we're kind of just in the middle of the range at 26. 20,000 is a big support level in my opinion, because what you're seeing is active entities tick up. So more people are starting to come into the network again, realizing what may be happening over the next 12 to 18 months with central bank policy getting easier, not harsher. And the price itself has actually come off recently from the 32 level highs. So what you're seeing is maybe, fairly valued or undervalued, not cheap, not massively cheap, but not overbought like it might be 35, 40, 50K. But then as time moves on, that's going to change as well. As more people come into the network, the price would obviously have to reflect that. So really important data where just shows us we are grinding through that part of the cycle. And, monetary policy is going to be very different in 12 months. But as investors, you want to look at this real data to show Bitcoin is growing fundamentally at these lower price levels. He also looked at similar data for Ethereum as well in terms of active addresses versus the price. So he says the Ethereum ecosystem is expanding at pace with active addresses in the layer 1 and layer 2 hitting all-time highs around 2 million. Based on L1 active addresses, the network is fairly valued, but once we add in the exploding L2s, the network appears undervalued minus 1.5 standard deviations. You can see that here. So we'll look at this data here, which is the L1. Price divided by active addresses, just on the layer 1, around about fairly valued in terms of this. You can see during 2020 going up, way higher. Now that is when the monetary base is being debased. In 2020, 2021, you have this huge rise in asset prices. But what that actually is just the dollar getting much weaker and being debased. And so when you have 40% more dollars and the same amount of Ethereum, the same amount of Bitcoin, price has to go up. but that's not real adoption and growth, right? The difference now is that you're seeing active addresses increasing, and the price to those active addresses is really not overdone. So as an investor, use that data as you would. I don't think you're buying expensive assets here. They're kind of fairly valued around this price for their adoption, and the money supply going up or down is kind of irrelevant if you're investing anyway, because you invest through those cycles. Once you add Ethereum L2s on here, Ethereum price actually goes under fair value, so it's actually cheap relatively. Now you can see it got cheap around the end of June, July, when it bottomed out, when we hit around 900 something ETH, $1,000 ETH. So yeah, it's moved up from there, but not massively overbought in terms of real adoption versus price. So that information, I think, is very important for investors who are looking to dollar cost average and buy in. You're not paying up too much, not getting a massive deal right now, but around about fair value or so, dependent on actual adoption and growth, which is happening, versus the price of these assets. We're coming to an inflection point in the macro where you're seeing a lot of weak data coming out. Housing data, economic data, PMIs are all coming out pretty weak. Some bright spots, not great, kind of a grinding through, right? And so we have to expect that central banks are, squirming around saying, yeah, we kind of think we're done raising rates. We're not really sure. So they're going to try and eke that out for as long as possible. But if anything breaks or anything like that, they will obviously support the economy just like they always do. Now, we also have to assume they're not going to be really fast on the trigger finger and just flood trillions into the system like they did before. That's not what they want to do because they're so scared of inflation. So what we may see is just a grinding of prices. So what do you want to be invested in during that time? Things that are going to find it pretty hard to grow in a slow growth environment, or things that are actually going really fast, like more than other things, like Bitcoin and ETH are growing fundamentally faster than most other things. Not everything, but considering their size and scale and what's happening here, you've just got this real fundamental growth and grind in these prices. And so that's just a great environment to be in for investors, I think. You're just really investing in the fundamentals rather than trying to predict that the thing's going to go up 250% because they're flooding the system with money again. If they do that, these assets are going to protect you from that because that's what they've done in every previous cycle. But if not, they are just fundamentally growing. So it's a great position to be in my opinion. If you are a trader, check out the Bybit deposit bonus in the description, up to 30K. You can also check the Crypto Investor course. I updated it recently with my strategy for investing in these assets throughout the next part of the cycle and the Bitcoin halving. Check the links down below for that. I'm James with Money TG. Cheers for watching, and I'll see you in the next one.